To see you as always. How do you think we are in terms of the rally having any more life to it? Was that it? Because we just got too much going on. CPI is going to confirm that inflation's still hot. Earnings are going to confirm that the situation's deteriorating.
That's the problem, Scott. We're not going to see any reprieve from this. The markets can't have a sustainable rally until they stop hiking rates. As long as they're going to have a hawkish tone, we can bounce a little bit to the upside. We can certainly be range bound. And as we've learned and grown somewhat accustomed to recently, stocks can go down. But until they pivot, we're not going to see a sustainable or lasting rally, unfortunately.
So if that's the case, right, and we're going to have more dips than not, as we suggested in the intro, you're using them to your advantage, at least what you hope is to your advantage. You bought more UPS, you bought more Qualcomm, and you sold Marathon. Give me the reasons why more UPS and Qualcomm here.
Well, UPS is a stock that we had called away and sold at a nice profit somewhere in the 205 to 207 range. And we started reaccumulating the position. Admittedly, Scott, we started a little bit too early. It was before the FedEx news. And then they just tanked in sympathy with FedEx. You and I had a great conversation that day about it. But what we like to do is, with great patience and a long-term time horizon, take our time as we build positions. So we finished off that what is now a 5% allocation in UPS. You know, you've got a almost 4% dividend, very, very attractive PE ratios now. Obviously, the stock's come down a lot. It's trading around 12 times earnings. But over the past 10 years, they just continued to raise that dividend. And that's our playbook. If we can have stocks that turn a profit, they have an EBITDA, they return cash to shareholders, certainly in a time period like this, that type of methodology can work. Same trade with Qualcomm, PE of around 10, low for a tech name, 2.5% dividend, strong dividend growth over the past 10 years. Now, they've had an issue with chips as a result of the government's decision to hold off exports to China. You know, we don't know exactly how that's going to play off, but these stocks have tanked as a result of it. We're using that as an opportunity to really start putting this in as a new position. Could it be worse before it gets better? Absolutely. So we're going to be very patient, very slow, and very careful. We own 2% of Qualcomm with a target of 5%.